Okay, finally, I got myself live because I was trying to do this live sort of in the late morning of the UK time in the office from German Street of London, which is the men's street, and I couldn't get myself live, probably due to the Wi-Fi in the office. I was connected, but it was not allowing me to live. I had, quite a few friends from the Far East end that are actually waiting for me to go live. And then I had actually somebody who forwarded my tweet as well on Twitter, because you can link Twitter to YouTube. So I was a bit disappointed. But there we go. I still got people waiting, and I'm very happy to be here. So it's Tuesday, 27th of July, and it's 2:34 p.m. And I've got some building works done outside next to my house. My neighbors undo their scaffolding, so there might be some occasional noise. But apart from that, we're all good to set. And today's topic is going to be around curve finance, and what we can do about that. And thanks for tuning in. Anything I say today is not financial advice, of course. And please do like and subscribe. And if you know about it, then we can discuss. And if you're new to be here, then please, I hope there's something for you to learn. And if you know everything, then treat it as a, English lesson or a discussion in the field. So let's get started. So before I start to talk about curve, I want to just do a quick review on DeFi, just in case you're new here and you need to be more familiar with all these keywords that takes place in the field. So DeFi stands for decentralized finance, which is what blockchain technology allows we to do, experiment where we can deploy our capital, where we can put our money to generate interest. And literally, DeFi allows us to be the bank, right? Remember, I touched base on DeFi in one of my last episodes last week. And then we also introduced DEX, DEX. DEX stands for decentralized exchanges, right? So compared to traditional finance that we do exchanges from fiat currency to stock market, for example, we rely largely on centralized exchanges to make the transaction happen. But in blockchain world, in the crypto world, now we have decentralized exchanges, which allow us to do exchanges on a permissionless basis, but also without a third party, without a centralized third party. So that is a couple of benefits from using a DEX. So now, why do I want to talk about curve finance today? And it actually is the first project on the under the DeFi umbrella that I'm touching base on. The first one. Why? And why have I titled my live stream today as curve finance is the DeFi world Forex? And I think that is a very important message. I learned from Noah on one of his live streaming. He keeps introducing the curve as the DeFi Forex. So what is Forex? Forex, if you're not familiar with the word Forex means foreign exchange market. It's basically, okay, I'm in the UK, right? So I use British pounds in my card. And if you guys are in China, then you would be using RMB on your phone. And if we want to exchange between British pound to the Chinese RMB, we would be relying on a foreign exchange place, a foreign exchange market. And short word is Forex. So same or similar rules apply on the DeFi world on blockchain. Curve is almost like a foreign exchange market, central place. And why do I say that? And what's the difference between curve finance and all the other DEX and all the other finance protocols? Now, so far, what Curve has proved to the market since the birth of it at around, I would say, middle of the year last year, so sort of around the DeFi summer period when Curve first went live. And up until now, so it's like just over a year, Curve has never been hacked. Curve has got the highest TVL. So TVL stands for total value locked, right? And also my observation of Curve is even after the market fell on the 19th of May, a lot of platforms, including Aave, TVL has shrinked a lot and reduced a lot. And Curve has been the only platform that not only its TVL not shrinked, but it actually grows back to its all-time high and continue to grow. So it actually became the highest TVL in the field. And that is incredible. That says the market demand. And why would Curve Finance have such a big market demand compared to the other platforms? Ari is brilliant, and Ari has got something new coming up, which I will cover in the next in one of the next episode. But Curve has its very unique technology it uses that it distinguishes itself from other DEXs, including Uniswap, including SushiSwap and PancakeSwap and other DEXs. And Curve allows a trader to have a minimum slipperages. And also Curve allows liquidity providers, LP, remember? So whoever wants to put your money into a liquidity, into a pairing pool to earn transaction fee from traders, right? So different way of participating in the DeFi, if you still remember. So Curve is such a powerful place that not only normal users like us who might want to use Curve, but more importantly, its features and functions allow larger users or even organizations like Binance, for example, or projects or different big projects that hold a large amount of coins or money they want to exchange. In particular, stable coins. They would have less slippage, so which means if you are transferring from USDC to USDT, 100,000 USDC would allow you to exchange equivalent of that to 100,000 USDT without any slippage price, because when you're trading a large amount, you would want it to be as fair as possible, whilst other DEXs sometimes have a bigger slippage, so you will get less money. And that's not what you want when you have a large amount of money. Now, I know you have to sort of imagine it in your head, because none of us, I'm guessing, have that huge amount of money with us that we need to worry about that. So for us, if we want to trade a simple pair, we might be using Uniswap. Actually, Uniswap is one of the very first DEX that I used myself, which Uniswap I will cover in my next episode. But Curve is slightly different and have a better feature to allow less slippage for bigger finance institution to participate, which since we're in the field, right, in the crypto market, we need to, okay, we act small because we probably have a small amount of capital, but we need to think big in our head and be able to see what the finance institutions are doing, what the government might be doing or thinking, what the big players are doing, what the whales might be doing. So we need to be able to foresee that and do our own actions according to our strategy and the plan. That's not a problem. But don't just see what's in front of you and not seeing the bigger picture. Because I believe only until you can imagine what you want it to be, where you want to be, then you can work towards it, right? If you only see in front of you, then you're not going to go very far, are you? So that's why I think Curve is important for us to understand, and why Curve is the first sort of project that I introduced in my video series. Now, we kind of have this idea about Curve, and it's good for stable coins. It also started pairs between stable coins and BTC, ETH, or other coins. And we kind of understand, okay, Curve has this feature that is a foreign exchange market, because there are so many stable coin projects that have their coins deposit on Curve to allow users to use. The other thing that we need to learn about Curve is its token economics. Okay, so what is token economics? Now we know on blockchain how projects work is that project will have its tokens or coins, and token is a way of a reward to give to people who have contributed. So in the past, it usually goes to miners who contribute their nodes of computer calculating power, electricity, etc. So miners get a share of the coins, contributing to developers, software engineers, whoever are doing all the hard work behind these projects. And now with DeFi, these tokens or coins could also go to people like you and me. If we put our coins into a pool to provide LP, then we get a share of the transaction fee. So that is also powerful for Curve's token economics and how it works. Now, if you want to know more about how exactly Curve's token economics is, go on curvefinance.curve.fi, stands for finance, and they have a lot of information on there you can actually read. So I will explain how a Curve works and why the next keywords tagged in here is convex finance. And convex is also built, I think, by the same team as Curve. And convex also has competitors, which are Yarn Finance. Yarn Finance actually was there way before convex. So Yarn Finance was doing really, really great until convex finance had its birth. So that's very interesting. And how do you, as a beginner, identify all these differences? Okay, that's what we're going to do in the next 5 minutes. So Curve's token economics, because remember, Curve provides a good place for a lot of large players. So imagine yourself holds a wallet of Binance, and you want a lot of users, whales, big players to come to do exchange with BUSD, for example, Binance USD to USDT, okay? So Curve's token economics will require you to stake CRV token, which is Curve Finance's platform token. And the longer you stake, right? Stake means you put your token on a place, on a smart contract, onto this platform and lock it for a period of time in order to have your proportion of occupying the tokens, in order to have your power, voting power on the platform, have a say over what you want to do. So when you deposit CRV token on Curve, it will ask you how long you want to do that. And the longer you do that, up to 4 years, the more voting power you will have. So as a finance person, I would want my voting power to be as much as possible, right? So when I make a proposal on the community forum of Curve, I can vote, and people who support my project can vote. And if it goes past, then I could, do what I would like to do under my proposal. And that's one of the token economics works for the project holders. So what has got it to do with users like us? Now, if you were using Curve before, and if you have your assets that you deposit in multiple pools, then one thing you will notice is that you actually get a boost of rewards you get from Curve platform. And Curve platform gives you rewards, consists of Curve, which is the token of Curve Finance, and also 3 CRV. 3 CRV is equivalent to US dollar value, which is actually the reward you get equivalent to US dollar, and it's part of the platform transaction fee from Curve. So as a user, you can also try to lock your Curve on Curve Finance in order to get a bigger boost, to get more rewards from Curve. But now with the birth of Convex, which is has a different, slightly more sort of user-friendly UI to an ordinary user is that you can actually, instead of using Curve, which might look a little bit complicated and more suitable for big players, you can actually use Convex, C-O-N-V-E-X, Convex Finance, to do the equivalent things on Convex, which will make things much easier for you. So what does Convex do for you is that you deposit, you buy Curve, and you transfer Curve CRV into CVX CRV, and you just deposit CVX CRV to Convex, and then that's pretty much it. And you wait for your babies to be born, which are rewards that consists of CRV, which is a reward from Curve, and 3CRV, which is a platform revenue stream from Curve, and also CVX, which is the platform token from Convex Finance. And that gives you, I think at the moment, about 60 to 70% APR, so per annum that you get of how much you deposit. And just one thing bear in mind, the price, because the price of CRV and CVX goes up and down, right? Because they have their volatile assets. The APR shows on Convex website goes up and down. So about a month ago, the APR was over 100%, but now I think it's between 60 and 70. Is it why? It's largely due to the price of the coins goes up and down, or down in this case. But once the market picks up, we know Bitcoin is being pumped. Probably with some patience for the next few weeks or 2-3 months, we will have a next good bull run. Then CRV and the CVX price will go up, and then you will see the APR go up as well. Now we are largely quite lucky at this stage because CRV still give us the incentives, and CRV is I think designed to be mined over a 2 years period of time. So if you calculate the time, so starting from mid last year, now it's mid this year, and we have probably another whole year that we are going to get the same amount of CRV and CVX from putting our money on Convex Finance. Yeah. So every day, regardless of the price of these coins, the quantity, so the amount of coins you get from the platform are the same. Now, I've been working on a spreadsheet, which I will show you guys in the future. I've been recording it for, now it's 27th of July, so I've been recording it for almost a month. So each day, you will notice the coins you get are the same. The platform revenue stream share could be different, but good. So don't just be fooled by the price, because that's one of the mistakes people tend to make when they come to the space, because all they want to do is make money. Of course, all of us want to make money, and they all they see is the US dollar equivalent, but they actually didn't notice other things like the quality of the project, like the sustainability of the project, like actually the price is going to go up or it was down. So that's how you need to look at these things. So that's pretty much about Curve and Convex. Now I think some of you are actually on the live stream, and before I go, if you have any questions, you can ask. Actually, just type it in the chat, and I can answer you now before I go. And while you're thinking about your questions, maybe the other two projects that I would touch base on is the Yearn Finance and Badger DAO, because Yearn Finance and Badger DAO also work with a Curve. So if you go on Yearn Finance or Badger DAO, you will see that they have pools that are very similar to Convex Finance. And then Yearn Finance will give a incentive of YFI, so Wi-Fi coin, which is the token of the Yearn Finance platform as an incentive. And equivalent Badger DAO will give you, I think, something called badge. That is also an incentive from that protocol. So all of the new protocols, I mean, Yearn is older, but let's say Badger DAO is newer, and they build their protocol on top of Curve, right? So you have Ethereum, and then you have Curve, and then you have Yearn Finance or Convex or Badger DAO. So the layer is like 3 different layers. So the more it's almost like if you choose to go to Badger DAO or Yearn Finance or Convex, that's the 3rd layer, right? So it literally means the more risk you're taking. So I mean, we all know that there are sometimes still bugs in a smart contract. Nothing is 100% safe, but more or less we trust smart contract on Ethereum in particular is because we know Ethereum has been there for years, and although it's slow and gas fee can be more expensive, it is safe. Because same thing apply to like I think Polygon, right? So layer two, one of the layer 2 solution of Ethereum. So Polygon also works with Curve. So on Polygon, and also Phantom is also another chain. They all have their finance protocols that work on top of Curve finance. So if you are actually happen to be playing around on Polygon or Phantom or some other chain, I don't know, there are so many different new chains these days, you will notice finance protocols being built on Curve and working with Curve's pool. So you will find a lot of similar products that might be giving you slightly higher yield than Curve or Convex. Usually they are largely incentives, so incentive coins from their own platform. And this price goes up and down quite significantly. So don't be fooled by the APR. Make your own judgment, do your own research, and make sure you actually trust the platform, because not all the platforms are going to last forever, are they? So we got to just be wise to know where to look at if we decide to use Curve and Convex. I think that's today's content. So we reviewed quickly on DeFi. We touched base on a few DEXs, but in particular Curve Finance and Convex, and that's a top recommendation from me. Although it's not financial advice, it's for education and entertainment purpose and for discussion. For those who need subtitles, I think YouTube will generate subtitles probably about a day, so 24 hours after this live stream being finished. So if you want to ever review the video with English subtitles, I think wait for a day or 2, and then the subtitles you can turn on if that helps. But also for those friends who are in the Far East, we have a WeChat group, so we can always discuss anything in Mandarin in WeChat. And also please do like and subscribe and join Discord and follow me on Twitter. And I will probably be doing Uniswap in the next session, in the next half an hour or within half an hour. So if you're not sleepy yet, stay tuned, and I will see you very shortly. Bye for now.